The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 19th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 400 points. Its average daily movement during the last 10 trading sessions is 392 points. Is that the end of the move today, or is it going to be some type of expansion, like a Fibonacci expansion, 1.272 of the average true range of 393 points? Somebody out there do the math on that. That's what you could or should be looking at. Inside the S&P 500 down 51 points, nearly 2%. NASDAQ 100 off nearly 3%, 200 points. And that is where we are going to begin the day out here. If we take a look at the NASDAQ, and I'm sure for the Denners out here, I have not heard any shows today, but I cannot be the first person to have pointed this out. But for those, well, actually, I'm not going to point anything out if we don't get some data. What do you mean it's resolving a symbol? It's the NDX 100, for goodness sakes, out here. That's not a good thing. I'll tell you how we're going to do it. We'll come back to that. Let's go to the NASDAQ Composite. Stevie's always got a plan B out here. And if we take a look at that plan B, it really is part of plan A. And that is what I was going to share with you inside the NASDAQ Composite. We can do it for the, or the NDX 100. We'll do it for the composite, is the island top that formed today. Now, you might say, what is an island top, Steve-O? And what I'm going to say, it's one of the most bearish patterns that can form inside a indice, certainly inside a stock, but certainly inside an indice out here. Now, we don't have it inside the equity futures contract. I don't believe we do. If we did there, then it might have some more meaning, but let's face it, it has meaning out here. I don't know which of the stocks inside of the NASDAQ Composite or the NDX 100 also have this island top, but that would be, those would be the individual stocks that would be really worth noting out here. Now, the way that you form an island, now this is at all-time highs out here. So technically speaking, it has more relevance than happening someplace down lower. And so what we're talking about is back on, I believe it was a Monday, no, it wasn't a Monday. It was March 9th out here. You saw the NASDAQ Composite gap up from the prior trading session. The prior trading session's high was 74.3501. Then what we did was we went higher sideways over the course of the next 5 days. But what took place, we traded in essence inside of that candle session, give or take from a closing basis, with the exception of the 10th. Then what you have today is you have a gap to the downside. The gap was below 74.3501. I don't see today's session being turned around Tuesday because it's not Tuesday, and I doubt that this session is going to turn around. More likely than not, you're going to see the session close at or near its lows out here. That's a typical candle formation that is in place right now. So you have an island top. Could be a major topping pattern. You have that same thing. Now, we also, inside the NASDAQ composite, its advanced decline oscillator reading is below the zero line. It's minus 47 and change out there. Not overbought. No reason for price not to run lower. We'll come back to the spot volatility index for those of you that were asking about that question, because I know was somebody out there. So we have to take a look at everything. If I come back to the NDX 100, let's see if it populated. Oh, sure it did. There's the population, and there is your island top reversal pattern at all-time highs. Now, at this stage here, like any bearish reversal signal, where price goes back to, or where you focus on, is at least the prior swing point, whether it's to the upside, in this case here, to the downside. That really takes us into the session of March the 2nd. The high, which is 68.20, right now we are trading at 68.10. So we're trading inside there, and that then begets the question, well, are we trading inside there with or without volume? And inside the Qs, that's always a tricky thing, because the Qs make bottoms with volume. Well, today, you're at 42 million shares. You're coming into the swing point that has 57, March the 2nd. So, look, you are moving into there with volume. But can you have washout volume with an island top in one single day? The answer is you can have anything inside of these markets. But we'll pay close attention to that island top. Where's the next place that we go to try to figure out, well, where is price cascading down to? We already talked about the swing point. In this case here, you'd have to say the NDX 100 would be looking at least the bottom, or the Qs, if we use that, the bottom of the March 2nd swing point. And that's at looks like a 161.96. Now, to back that up, what kind of problems are there in River City inside the NASDAQ? Well, we can come take a look at this chart. This chart shows us our market breadth. From a daily perspective, you have 43 issues inside the NDX 100 trading below the bottom of their box, with only 6 on a daily basis trading above the top. So that is a clear bearish crossover. That took place this morning at about 7:30. Was just one issue. In other words, it was like 23 to 24 or something along those lines. So that has certainly expanded. However, even though there's an island top out there, however, we have seen crossover after crossover for the last 30 days. It's really a little bit more than that. Not 30 trading sessions, but since February 15th out here. And typically when you get these crossovers, and today could be it, you don't know, but when you have this churning around up here, meaning all of these daily crossovers, well, that is a lot of churning. It is a lot of sideways action out there. That's what's going on inside the index. The weekly chart, weekly time frame, still remains bullish. That's got to make you say, something to think about. In the case of the weekly, 40 issues trade above the top of the box, 24 below the bottom. Steve Rhodes with TFNN. When we come back from this break, we'll go answer that question. Are we going to get a bounce or bottom? Rick?
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the question inside the Tiger's Den is asking if I would go ahead and review all of my tools, as many as I can come up with, for the S&P equity futures contract, and specifically, where are the lower price targets? Then somebody put down how important was 24.79, 27.45.47. Okay, so let's first do this. To answer that question specifically, if you were going to ask me to give you a number, the number that I would provide to you as price targets would be two numbers. The first would be 27.01 and change. We're trading right now at 27.06. We've been down as low as 2,700 in 2 ticks. So the first objective, first price objective or price target has been hit. That is the weekly center of its box out there. That is where both buyers and sellers, that's the very right-hand panel of my screen out here, where buyers and sellers are most comfortable with price. Why? It's a mathematical formula out there, and we pay attention simply to those levels. If that fails, the next price target is the bottom of the box, and that level is 26.79. There are no other profile levels on either a 61, 22, 40. Let me put up a 30-minute chart out here over on the very left-hand panel. There are no profiles on any time frame that we have right now otherwise to suggest where price targets would head back to. What we can also say, though, in looking, just like we did with the Qs and looking at the S&P 500, is the ES Mini would be targeting the swing point for March 2nd. Anywhere from the high to the low, 2,700, well, we've already established that that has occurred. In other words, price has hit that level. The number was 2,700.75, and we hit 2,700.5. So you, excuse me, what you have here is so far a rejection on price of the swing point for March 2nd. Now, you and I are analyzing the S&P 500 and the equity futures contract, a whole different story and deal than taking a look at the NQ or the Qs or the NASDAQ 100 or the NASDAQ composite. So let's just keep our mind focused here, not worry about what we had looked at prior, and just stay within the tools for the S&P 500. Okay, so we've hit a level out there. Now let's go take a look at volume. the only volume metric, the easiest volume metric, the probably what's going to make the most sense out there is going to be by taking a look at the daily swing point inside of the SPY. And March the 2nd, the volume was 139 million shares. As we speak at 1:21 in the afternoon, the volume is 46 million shares. Unlike the Qs that have volume, the SPYs, the S&P 500, does not. Does not. Now, a real rejection inside the SPY, so to speak, would be 269.72. But here you're dealing with dividends and so forth, so you don't want to use that number. You can use the SPY to say, okay, we're testing a swing point with light volume. Then what you really want to do is go over to the S&P 500. And the number that you want to be looking at there, we just took a look at the number inside of the ES Mini, and so that was valid. Inside the S&P 500, the number is 2696 and a quarter. We haven't gotten down there yet today, but because of the test that you and I just looked at inside the ES Mini, I say we are there. You've got a test. If price closes above 2696.25, you have a rejection on price and volume inside of the S&P 500. Use the S&P number. Don't use the SPY number out there to determine whether or not you've closed inside of the swing point. What else is it about the S&P 500 that you and I know? Well, one of the things that we know is that today's VIX rate of change, as we speak right now, is 36.39%. That means from the close on Friday, it's up 36+% out there, $5.75. That's number one. We know when there's a 10% or greater rate of change, you see a bounce or bottom. Clean out the ears out there. Hear what I say. A bounce or bottom within the next 24 hours, typically in the overnight session. I'm assuming the market's going to finish bad today just simply because of the candle formations that we're looking at. That's the assumption. And therefore, don't be surprised to wake up in the morning and see equity futures contracts trading higher. I don't know where and what position one might have out there. Just simply anticipate that. Does it have to happen? No. But here's the chart. All of the blue arrows out there. And if you take a look at them, this will show you that, no, it doesn't happen all the time. This is only looking at the S&P 500. If you went over and you took a look at the ES Mini, you would see the bounce that at least took place in the overnight action. Again, bounce or bottom out here. So you can go do this work on your charts as well. So you're coming into, in the ES Mini, you're coming into a swing point, I should say in the S&P 500, with light volume. You're at, in the ES, a resting point where both buyers and sellers like price out there. So you've hit that target out there. I think you have to watch for what happens going in to the close, right? It's just got, now, let me give you one other thing to think about. If we take a look at where the spot VIX index is trading, and we take a look at it in relationship to its 6-month reading, 6 months out, you're going to see that it gives you a ratio greater than 1. The number is 1.05. Okay, just so you see, no sleight of hand out here. If we come back, because you can do this too, you take a look at the spot VIX index, trading at 2149. You go take a look at the 6-month. On my system, the ticker symbol is VXMT. You can do the 3-month as well. The 3-month is just worse, quite frankly, than the 6-month out there. I was just trying to get rid of a lot of the noise so I could show you this chart out here, because here's the 6-month. And you tell me when this ratio goes above 1, has it meant anything to you or the market or the S&P 500? Well, June 24, 2016, it most certainly did. Take a look at November in 2016. It most certainly did. Take a look at back here in February, what it was, 6th, 7th out here, it most certainly did. Take a look at a short-term bottom at this stage here, March the 1st, March 2nd out there, it most certainly did. So why would today, March 19th, be any different? That's the question you have to ask yourself. You can say Stevie doesn't know Bupkis out there, And that may be true. But what you and I know is the bupkis on this chart here says not so fast. So with regard to the ES Mini, and to answer that question, and to make sure that I clearly did, not being a politician here, the level of 2701, 2702 was the first stop. Is there going to be a bounce from here? And then maybe a resumption down to 2679? Sounds like a real possibility. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 443 right now. I think a 1.272 expansion of the average true range is in the 520, 530 range out there. So we'll see if that's what ends up happening. Now, with regard to the short term, we'll go to some questions out here. With regard to the short term, what I want you to know is I don't have any type of signal of any kind of bottom at this stage of the game out here. The only thing close that we can take a look at, and probably it would be inside of the NQ, where there would be some type of, okay, it's over signal, is the fact that on a 30-minute chart, we've got wave number 7 that we are in right now. It's not over. 1:30 session just ended, so we're just now starting the 1:30 to 2 o'clock session. We make a lower low. That just continues on. Price is moving lower, doing less relative energy out there. That pattern alone by itself is not a signal of a bottom out here. But if the cavalry were to arrive and if price were to close over Stevie's red line, currently priced 68.74, that would be a different story with regard to a bounce. What I want you to know is we do not have that as we speak just yet, which really supports more so the fact that the way that the session should unfold today is the market should close at its lows or lower. Well, if we've already done 399 or more points to the downside, which is the average true range last 10 days, you just take that 399, multiply it times 1.272. If that's what we do out here, let me see, I give you the exact number, 399, 1.272. That gives you 507 points. So between 507 or 1.618, 645 is likely the tally for the day as we speak. That's what it looks like to Stevie as of 1:32. I don't know what it looks like to you out there, but that is certainly what it looks like to me. Now, where were we? Oh, we had a couple of questions inside the den earlier. So let's go to those questions. There were two questions. One was, can we take a look at Cleveland Cliffs? CLFS is the ticker symbol. So that's what we have up on our screen. We've got our daily, our weekly, and our monthly time frame charts out here. Inside the daily, not good. Not good because you're trading below the daily bottom of its box. So as we move over to the weekly, says this thing could or should, because it's a bearish structured box, pull back to about $6.28. We take a look at the monthly profile. You're below it, meaning that 789 has been resistance. You've rejected that level. My call is we just take a look at just this 3 time frames charts and just use our market profiles for Cleveland Cliffs Inc. Says to me 628 is what you should anticipate as to where price is headed. Lastly, we can take a look at the volume from February 28th. 8.5 million shares. You're at 8.8 as we speak today. So this is busting through a prior swing point where we saw a change in trend with volume. Says to me that that weekly price objective is really where Cleveland Cliffs, CLF, is headed to. The other question was, can we go take a look at Snap, Crackle, and Pop? SNAP is the ticker symbol. And as we look at its daily time frame chart, because we had marked this up before, this thing had, I don't know, I got all these red lines in there. Oh, that was the gap that we had that used to be resistance. And the question is old resistance new support? And I don't know till the end of the day. But if you were to see it close above 1636 today, well, then the answer to that question would be, yeah, maybe so. Volume-wise, though, February 27th, 30 million shares to the downside. You've done 17, so yeah, maybe so with regard to Snap. Now, if it closes below 1636, then what it should do, and I have no idea why that 1251 level is there, because that doesn't make any sense. Then what we should see is a move down to completely repair the window. That means get down to the top of the candle session where price had gapped up from. That takes us to February 6th, and that would take us to 1420. So Stevie's read on Snap, Crackle, and Pop is this thing will pop to the downside if it closes below $16.36. That's the daily time frame. The weekly time frame, not really that helpful. We're trading above the top of its box. 1557 to 1396 would really be its range out there. And 1396 should be nice, strong support. We got nothing. I mean nothing on the monthly chart because it just hasn't been trading for long enough. Now let's go to the emails out here. We've got a question coming in from JJ, and JJ says, "Hi, Steve. Hi, James. What do you think is the best buying opportunity today or this week? Mu or NVIDIA, Micron or NVIDIA?" I don't know the answer to that, but let's go take a look and see if either are really a buying opportunity. As we take a look at Micron technology with the semis getting smacked, Crackle, and popped out here, not too shabby. Really not too shabby out here. Now, There is a brand new box formed 3 days ago, and it's a bullish structured box, meaning the center line closer to the bottom than to the top. And so price ought to, because you're trading inside this box, maybe will, 54.60. Action today inside of Micron, and that probably gives you something to think about out here, because the semis were down like over 2%, as I recall. This looks pretty good. Now, would you buy it here? Where's the buy on this? That's the better question. 51.66 would be nice. Again, I don't know what the market, how the market's going to unfold over the next couple of days out here. But you know, if you're asking me this week, you have to find that so-called bottom. If you're just buying it for a bounce out here, you hate to buy this equity up right around resistance, even though it's behaved well today. So Micron Technology, when I take a look at the daily chart, not too shabby. The weekly chart, not too shabby. The monthly chart looks beautiful out there. Let's go take a look at the other one. You want to take a look at NVIDIA, NVDA, and we're going to give you an answer, which one of the two. And in the case of NVIDIA, this thing has now moved down towards the bottom of its profile out here. Let's go do a little bit more inspecting. Yes, Inspector Clouseau. We'll take a look at this chart out here and see that today this is pulled back with 11.7 million shares as we speak. So that's around the 18, 19, 20 million share mark out here. And the swing point has got 22 million shares. Has it tested the swing point? It has not. That test would be 236.80. We've been down to a low of 237.76 out here. However, it has tested and rejected the bottom of that box. So now, how do I answer your question? If you were to see a turn in the market, because this has come down to the bottom of its box out here, and you're just looking for some kind of day trade, I'm not recommending this. I'm answering JJ's question, which is which one looks like a better buying opportunity today or this week? And he didn't give me the time frame. I would have to go with NVIDIA as long as it holds this support. Your preference, though, JJ. You want to see one more push. You want to see a rejection. That means price to get into 236.80 and then close back above it and do it with less than 22 million shares. And that ends our game. Which one do you want to buy? Micron or NVIDIA? You got the stocks down 2.7% out there. You don't want to buy any of them until you see a nice turn. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the question being posted inside the Tiger's Den is if we could go take a look at the TLT. The TLT is the ETF for Treasury bond futures out there. If we take a look at it, so this is the iShares 20-plus year T-bond ETF out here. Right now it's trading at 119.77 out here. And you and I are going to go ahead and ignore the profiles that are on this because we know that what we should really be looking at is the underlying instrument, which in essence is basically the 30-year bond, roughly speaking out here. So we're just simply going to go take a look at that to then try to gauge, okay, where is it that the TLT is headed? So let's start by taking a look at the 30-year Treasury, and let's take a look at its set of market profiles. Here we've got 60-minute, that's the left-hand panel, 240-minute, 4-hour, daily, and then weekly chart out here. So we're really going to focus on the daily chart. And what occurred today was a nice little bullish structured box, market profile, that formed. Again, bullish in nature of its structure, simply because the center line is closer to the bottom than the top. What I can share with you with regard to TLT is with regard to the T-bond futures, if you were going to go ahead and short it, you'd be looking at 145 and 11/32 out there. That is the top of the box. Now, if price closes above that, that's going to give you a bullish signal to the upside. Likewise, the 30-year Treasury could pull back to its little rising trend line. That's a green diagonal line. That would actually take you into the 143.16 area. That's the center of the box. Or it could even take you to 143 even Steven. So it's trading inside of a range right now. It's brand new box, and those would be the price levels. Would I do anything right now? No. Could you do something on a break above 145.11? Yes. We'd have to take a look at where that A to B equals C D gives you a price projection. You are more better. If you were looking to go long this, you're looking for more of a pullback into that trend line, or into the bottom of that box, right around the 143 and 16/32 out there. That's what I would be looking for before you make any decisions about the TLT. If I go ahead and I do what? Pull this chart over here. We can go take a look at where Stevie's red line is. It's right around 143 and around about 143.5, really, is where Stevie's red line is. We also know that Friday's session was a little bit of a bearish reversal signal out there. The old evening star Three River Evening Star. So that says that the high of Friday is resistance. We know we've got a top of the brand new box. That's got resistance out there. So if you take out resistance, hey, price is headed higher. But that's about the best that we've got that I come up with inside of the TLT. I hope that that helps you out with regard to Steve-O's reading with regard to it. Now, this is potentially intermediate term bullish, counter trend rally bullish. Let me qualify that when I say bullish. In other words, I'm saying there could be more counter trend rally to the TLT, to the 30-year bond out here. In order to do that, it really needs to get above the 144.5 level, maybe a bit higher than that out there. So that's what I'm seeing when I take a look at the 30-year Treasury. I hope that assists you, as I said, with regard to the TLT. A question, Danny in Atlanta wants to take a look at the amazing one, and that would be Amazon, AMZN. And the question is, where might this thing head to the downside? So as we wait for our chart to populate, and the only reason you and I are waiting is because I come from the TFNN school of typing, and Amazon is not AMXZN, because you'd be waiting for a long time. So when you put the new symbol or the correct symbol in there, amazing what you get. Amazing search results you actually get to Amazon. Well, Danny, when we take a look at this, you had a brand new profile formed a couple of days ago. The bottom of the box, which is basically where it's trading, the bottom is 1535.62. You're trading at 1535.69. You've tested the bottom. It's held out here. So where is the downside? Very easily. If you were to see a close below the bottom of that box out there, neither bullish nor bearish, but a close below that is a close below support. That would then say, if you take a look at the weekly, 1430.51 would be your downside potential. But of course, we would really need to go take a look at the swing point out here, or I would want to, from March the 2nd. That gives you a range of price between 1455 and 1501. And you'd be focused on the volume, which is 6.5 million shares. Today, you're doing 4.3 million shares. So there's decent volume, but it's not as if it's exploding the March 2nd. It's not down there yet. It's nowhere near there. If you close below that the 1535.62, then I say probably it heads down and tests either that swing point, again, March the 2nd, or it gets down into the top of the TAS weekly profile. That's down quite a bit further. That's down at the 1430 level. So, Danny, I hope that that helps you out with regard to the amazing one, ticker symbol AMZN. No other questions, so that means we can just kind of surf around and figure out what it is, or I can just try to use my mental telepathy to figure out what you in the audience, what it is that you want me to look at out there. I'm going to go with gold. That somebody out there wants me to take a look at Goldilocks. So what in the Sam heck is gold doing out here? First and foremost, gold has a chance that it's forming a bottom. It really does have a chance. And the reason is because it has not taken out a number that it would need to take out in order to get bearish. Yes, that's right. You heard it here at 1:49 in the afternoon. And that number, drum roll Johnny, is 1064.20. And you might say, 1064.20, Steve-O. We're trading at 1318. You're going to wait till 1064.20 to tell me if we're headed lower? Well, 1064.20 with regard to gold priced in euros. That's the key number. And even as gold was pulling back today in dollaroonies, never really broke or even tested that prior swing point for gold priced in euros. To me, that is the most important tell in the market, the William tell out there. Now, gold is not rising in euros either. So for those of you that think that gold has definitely bottomed, you've misinterpreted what I said. I have not said that whatsoever. I said it could be forming a bottom out here because it hasn't broken through or closed below 1064.20. So that's a good piece of information. The next piece of information when we come back from these breaks is just a reminder of where gold is trading in relationship to its daily and its weekly profiles. And we'll go take a look at some other short-term charts, see what we can figure out there for Goldilocks. Steve Rhodes with TFNN. We'll come back for our 2-minute countdown as soon as we get back from this break.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So what gold has managed to do so far today, on Friday it closed below the bottom of its daily bullish structured box, closed below the weekly bullish structured box. So this morning when it was trading lower, that was to be expected. What may not have been expected was the mere fact that gold has gotten back inside the daily box. And it does set up that price could run up to 1323, even a 1339 level. However, that's not going to happen until you see gold actually close above 1319.60 out here. Because so far, all we've seen today is a test of resistance. That would be the first thing I would be looking at. The second thing, and I think even more important than those numbers, is Stevie's red line. That's priced at 1323. Any move right now inside of gold that tests Stevie's red line and rejects it is a signal that gold is headed lower in dollars. What you'd really like to see here would be the beauty. The beauty trade is that gold moves lower in dollars and that gold priced in euros does not take out that swing point that we looked at. That would be the type of positive bullish divergence that you want to see on your wall, on your screen. That would be a beauty. And maybe that's what we get out there. But until gold closes over Stevie's red line, 1323, and even then it would not be out of the woods, I've got to say a move lower into the bottom of its descending channel line, around 1295, give or take, or even an A to B equals CD to the downside, 1281, or lower, even 1264, is underway. We're not making that call. We would make that call if we saw gold priced in euros close below that 1064.20 level out there. So that's what we've got in gold land, and it's been great to be with you. I hope you've enjoyed the show. Stay tuned, because your favorite polar bear, he is the world's favorite polar bear. Even Coca-Cola likes our polar bear, David White. He's up next. After that, Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Maybe Turnaround Tuesday. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.